Hello guys, right now there is a lot of talk about if we actually enter a new recession here in 2022, and right now it is looking like there is a really high probability of that happening. I am in today's video going to talk about how you can prepare but also benefit from the coming recession. A lot of things has happened within the markets within the last week alone. First we have the flip between the dollar and the euro, and the last time this happened was 20 years ago. The Federal Reserve, they just released the newest information about the inflation, and the inflation is now at 9.1%, and that is again another 40-year high. The Federal Reserve, well, they're trying to increase the interest rate, and the last time they increased the interest rate, they increased it by 75 basis points, or 0.75%. The experts are now saying that the Federal Reserve is very likely to do the same thing again in July. But the most important thing that has happened is that the S&P 500 is now officially in a bear market, which means that it has lost 20% year to date. It currently seems like investors, they have a warped view on what it actually means to be an investor. And that is a result of the COVID-19 pandemic, where the Federal Reserve, they basically bailed us out of the whole situation. When COVID became a problem, we saw the markets dropping by 30%. And the markets, they only recovered when the Federal Reserve, they officially said that they wanted to step in and they wanted to help investors. We after that had a couple of years where everything just kept on increasing in value, and it didn't really matter what you invested into. We even had people who claimed that they were better investors than Warren Buffett and that investing is the easiest game. But with the Federal Reserve putting their support back, all of this is coming to an end, and we are basically left with record high inflation, extremely high prices, and all of this is right now being priced into the market, and that is why we see such large negative returns. We basically see that all of the market gains that was made during the COVID pandemic is being erased and the market is being reset. During the last major recession, the financial crisis in 2008 and 2009, we saw the stock markets fall and raising trillions of dollars of wealth around the world. People were left in shock as their houses and stocks just decreased and decreased in value. Many scrambling to sell and save some of their money. But believe it or not, the financial crisis also created a lot of millionaires. And that is because the reset button is being pressed, leveling the playing field. And that is exactly what is about to happen again. However, this often leaves people paralyzed by fear, uncertainty and doubt, while history has proven that the people who actually are aware of the reset, well, they start building their future. So now we know that this is the perfect opportunity for you to start making some money and setting yourself up for the future. Now it becomes all about understanding how you actually make money in the current markets. I do know this saying that the past performance is no guarantee for the future performance. However, this is almost completely false. Let me just explain. The market has always experienced ups and downs, and we've had so many recessions happening. But the thing that has always happened after a recession is that the market recovers. And it doesn't only recover to the same level as prior to the recession, but it also reaches all new time highs. It happens all the time. And at one point, well, then the market enters a recession again. And the one thing that is always true is that the market always recovers and that it always reaches a new all-time high. The question is only when is this going to happen, and that is why it's super hard to predict. But it is for sure that the market does always level out and also reach a new all-time high. And that is even though every recession is different, then the outcome is always the same. And if history is to repeat itself, well, then we're also going to be out of this recession before you even know it. And that makes your window of opportunity extremely small. Therefore, it is super important that you start acting today. According to the Bank of America, then the average bear market within the last 140 years has experienced an average downturn of about 37% and lasted for 289 days. The interesting thing here is once the bear market is over, well, then does the bull market start. The average bull market lasts more than 5 years with a return of 198% on average, which means that we actually can see the S&P 500 index at around $9,000 in 2028. That is an absolute insane return in only 5 years. And that only goes to prove the point that being invested right now is super important. Because when the bull market comes, and trust me, it will come, everything is going to go up in value, and it is going to go up fast. To emphasize just how rare the current market situation is, then bull markets have occurred 78% of the past 91 years and have on average lasted 973 or 2.7 years. The longest bull market lasted from 2009 to 2020 and resulted in stock growth of more than 400%. Bull markets are therefore by far the norm, and that is exactly why you need to start taking action and why you need to set yourself up for the future right now. This is a time where you have to go a bit against the crowd and you have to start investing as much as possible. What I'm personally doing is investing everything that I can into the S&P 500 index. And the reason for this is because it is so low risk. By doing that, I become a stock owner in the 500 largest companies within the US, and are therefore not relying on a single stock. So it is less risky than investing into single stocks, and at the same time it has great potential for future growth. When it comes to investing, there is generally two different strategies. The first strategy is to invest everything that you have at once, and you're basically hoping to time the bottom. You're basically hoping to put your investment in when the stock is at its lowest point, and thereby you get the upside and you get a huge return. This strategy is really risky because timing the market is extremely hard to do, and there is only a few people who's actually very successful at using this strategy. A much more reliable and less risky strategy is the dollar cost averaging strategy. This is basically a strategy where you invest a fixed amount of money into the stock or into the index every single month. This is what I'm personally doing. I'm personally setting a fixed amount aside every single month, and I invest this into the S&P 500 index. By doing this, I reduce the risk of going all in before the market is about to go down. I spread my investment over a period of time, and that is a really good strategy that is working super well. The strategy that I'm personally using for coming out ahead of this recession is to invest everything I can. I'm trying to maximize all of my capital gains as much as possible right now. I'm trying to make as much money as I possibly can. And that is exactly what you should be looking for as well. That was all I had in today's video. Thank you for watching the video. If you liked the video, then please press the like button below the video and subscribe to my channel if you want to see more videos like this one in the future. See you in the next one.